Well, we're back with you here on a Monday morning, and thank you so much for joining us. I'm Marlon Bowling with you, and as we go to our grain trade, again, I'll remind you, we did not have any flash sales to report this morning by USDA. So everything quiet there, and the market overnight was pretty quiet too. Let's see how we're doing this morning. Let's go to the corn board. Our quotes are from bar chart, of course, and right now you have December corn down 5 1/4. We're at $4.58 per bushel. You know, overnight we were a couple of pennies lower, and when we opened up, we just abruptly went down about 4 1/2, and now we're down 5 1/4. March is down 6 at 476 1/2. So a lot of pressure is starting to show up here in the corn market as we get toward the end of the month. Now let's take a look at soybeans. Well, you have one plus sign. You have January up a 1/2 cent at 13.31 1/4. Isn't that exciting? Now you have March down a 1/2 cent at 13.48 1/4, and that's about it. Now, if you look at the soybean meal trade here so far today, we have the December contract $2.10 higher, but you have the January now only 60 higher. We're at 434.70 per ton, and all the deferred contracts beyond that are actually lower. Now let's go to soybean oil, shall we? And here you have the, let's go with the January. We're now 96 points higher at 51.25 per hundredweight there. It's only 4 points from the high of the day. That's a little interesting. Now, over on the wheat, we'll go with Chicago. March is 5 lower at 5.72 1/4, just a penny and a quarter from our low of the day. Now, in Kansas City wheat, we currently have the March contract trading at 6.07 1/4. That would be down 4 1/4 cents. Look at that. We're over a dime off of our overnight high again. The nearby December is actually under $6 now. On spring wheat trade, Minneapolis, you have March now down 4 at 7.10 1/2, and July is currently down 2 1/4 cents. In our cotton market today, well, we'll go with the March contract there. It's down 182 points at 79.17 per pound, well under 80 cents as it stands at the moment. Well, we have in studio with us the one and only Chris Swift of Swift Trading, and he's based in Nashville. How are you?
Good morning. Doing great.
Hope you had a good Thanksgiving.
Fantastic. Sure
so
did.
You came
Lot
back.
to be thankful for. Yes, absolutely.
Yeah, that's a plus sign right there. He came back.
That's all right.
All right, let's look at these markets here.
Okay.
Nothing to write home about.
No,
they're
sideways. The beans are caught in a 50-60 cent range, and they bounced around it a couple of times now last week. The corn market, probably more than anything, really sideways to kind of drifting lower. And if I'm not badly mistaken, when I saw those last quotes, those are new lows in the corn from last week. So, and then wheat continually in a bear market, new contract lows in the Kansas City wheat, a little bit softer in the other markets. And it's just holiday trading. Most of all the cash sales are done now for this year. There should be some more cash sales the first of the year, and then after that it might slow down until we get into March, April, when need some more seed, fertilizer, and get ready for planting again.
So when I hear you say contract lows in corn and wheat, that doesn't give me a warm, fuzzy feeling about either one of those right now.
No, and it's just in wheat, the contract low. The corn, these are just new lows from last week.
Oh, new lows for the move.
From last week, yeah.
Gotcha,
but they've been pretty much sideways. But no, there's not a lot to look forward to that I can see. We've got no increase in demand. Our energy markets that we'd really been looking for to kind of boost higher, they still hadn't done anything yet, so there's no increase in the ethanol demand. What I do continue to hear is the biodiesel. And if I'm not badly mistaken, I think it was South America last week that raised their blend for the biodiesel fuel in their product. So the biodiesel, probably of anything, if there's any underlying support for something, it's probably that market.
So does that lead you to believe that maybe we would have the proverbial bottom pickers start showing up in the market here, maybe at the end of the month?
It's interesting because oil has really plummeted. The meal, when you look at the soybean crush, the meal is what's been in demand, and so we just kind of plummeted the oil. And here at 51 cents, that's not cheap, but it's not really expensive because it was over 60 less than a month and a half ago. Mm-hmm. So, you're looking at a good 20, 25%, now about a 20% decline in price. I'm looking forward to pick some up there.
So let's say I'm a producer and I'm done with harvest and I've got maybe, let's say, 30,000 bushel of corn sitting in the bin unpriced right now. How eager are you to do something before the end of the year? Or do you just want to just sit on it for now?
Probably between now and the end of the year, not much. I don't think there can happen. If I was going to sit on it, I might want to sell a call against the March contract and say, okay, I'm going to deliver in March. I got to pin the tail on the donkey at some point in time. So if I want to make that cash sale in March, I'll sell a call at some level that if it reaches there, I'm going to sell them corn. 5.10, 5.15, somewhere that you can pick up 7, 8, 9 cents worth of premium, and now the market's going to pay you to sit there on that time frame instead of you either paying all of the storage fees to it. At least the market is paying you a portion of that.
Is there enough carry in the market to make it work one way or the other?
Yeah, there's a good 10, 15 cents carry out to March. So, yeah, I think you could have enough of the carry out there and then sell that call against it. And remember, you got to be prepared to market that corn in March at that and ride the margin calls if it goes above that. But at least you're now 15, 20 cents higher making a sale, plus you capture the premium of the option regardless.
Interesting strategy. Okay, we'll pause right here. We'll come back and we'll talk livestock with this guy right here right after this. Okay, we're back talking with Chris Swift, and now we're going to focus on livestock trade, and that's kind of right in Chris's wheelhouse here too. On live cattle right now, we are still higher across the board, but already we have kind of fizzled from our earlier open. We had February with a high of 172.52, and now we're at 171.70. Can you tell what happened there? We're still 72 higher, but you know, early on, Chris, all these months were over $1 higher, and they're giving back a lot of ground here, and they're still on the way down the way it looks. April now only 45 cents higher. On the feeder cattle trade, we have the January contract now 92 lower at 218.40. Look at it, it had a high of 220.77, and we're already $2.35 off of that at least. March is down 87 cents. They're going the wrong direction from the producer point of view. On lean hogs, they're mixed, but February is down 45 cents at 68.32. What is happening here, Chris, with the cattle? Explain.
Well, there's an agenda in place, and the agenda is to ration cattle. We know we got a shorter supply of cattle, and so therefore we're going to do a couple of things that will help to take some of the pressure off the cattle. First thing we're going to do is we're going to put more carcass weights on them. And I looked last week, and we're about 4 pounds heavier week over week. We're 6 pounds heavier year over year. And if we think about last week's slaughter was 636,000 head times 4, that's 2.5 million pounds more of beef without an extra cow out there. So when we think about growing those cattle bigger, and then we placed a few more cattle in September and October, so we should have plenty beef, and we notice that we have more imports coming in. And more likely than not, that deal that was cut with Paraguay is much larger than what we think, because it kind of opens the door. And once that door is open, it's very difficult to get shut. And as producers, those large companies out there beholding to their stockholders, every little penny counts to them. So as they bring in more meat, it may be cheaper meat, but they blend it in with U.S. fat, sell that product, and that helps their profit margin too. But remember, the agenda is rationing cattle. If they tell you there's no more cattle out there, then what do you have to do? You got to ration what's left.
2 million pounds. Even I can't eat that much. I'll give it a try.
It's in all honesty, it's a very small percent when you look at it percentage-wise, but that's probably going to grow instead of getting smaller as far as carcass weights.
Interesting. Okay, well, thanks. Chris Swift with us. He is with Swift Trading here in Nashville. I appreciate the information. Suzanne, I'll turn it back to you.